This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Very good morning. Welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel D'Souza, and today we have Mangla Malu as well as Surbi Upadhyay, who joins us in the studio. Morning, guys. It's a Friday morning.
I definitely have the Friday feeling. We've got some checks, we've got some polka dots, and we've got some green for good luck for the street as well.
Yeah, why not? I mean, you needed it because yesterday was a slightly weakish day, so to say, because of the weekly options expiry. But the SGX Nifty batting on the front foot this morning.
Yeah, I think, and sometimes, some of those balls, it's best well left. So that uptrend is still intact. We'll make our way to all-time highs. It's going to be a good Friday evening. But the global cues this Friday morning are looking quite good as well.
You guys are talking about global cues. I'm thinking of my next vacation. No, everyone's going to Europe. Some people are traveling to Africa and Australia. How about going to space?
Well, Virgin Galactic,
yeah, exactly.
40% after hours. By the end of this month, they will announce their first maiden space tourism flight. How many up for that?
Yeah, I just need to save for it, which might take like about a decade. But, maybe
how about you, Nigel?
An advance loan by the 27th.
I'm taking a flight to UP tomorrow. I'm going to my in-laws' place. So I'm happy to go to Kanpur.
I think the potholes there would be no different from the ones that you have on the moon itself.
Space can wait. But should we let's
kick this off, guys. So to kick things off, the setup, at least from the international perspective, is looking fairly positive. It seems that Wall Street has put this so-called hawkish pause of the Fed really behind it. That was showing up not just in the equity market, but in the bond markets as well. The S&P 500, by the way, has rallied about 3% so far this week. And, it's the best week that index has had since March. 6 consecutive days of gains on the key U.S. indices. So the equity market seems to be in fine form. Whatever little volatility we had after the Fed meet, that seems to be done and dusted. On the bond side, we saw yields cool off, both on the 10-year as well as the 2-year. In fact, they've shaved off about 6 to 7 basis points. So what we're talking about is the 10-year coming back down to the 3.7% handle. That picture is good. In Asia, things are a little mixed. Of course, it's all about the Bank of Japan with the policy meeting in focus today. But the Japanese market has just been moving on steroids. I thought I'll just put up the data to put things in context, just how the last 1 month has been for a couple of these key markets, the interesting ones. So the S&P 500 up about 7.7%. This is not June, but the last 1 month. So you put the last 1 month's trade in perspective. You look at the Nikkei, and that's been the headline market around the world. We're talking almost a 12% rally on the Nikkei. China is where the problems are, and this week has been a lot about the rate cuts in China. That market's been kind of fumbling along, down about 1%. Where are we? We are up 2.2%. And I know Manglam and Nigel will talk a lot more about levels, but I just want to sort of end with looking at the Nifty Bank. I'm not even looking at the Nifty because for me yesterday, the biggest problem in the market seems to be the Nifty Bank, and now you can't ignore it anymore. Yesterday's candle was the biggest probably down candle in the last 1.5 to 2 months. I mean, the entire sort of duration of this April-May rally, we lost, a percent and a quarter. That index has come down below the 20 DMA. So the critical question that I'll look out for is whether we will get a buy on dips on the banking side of the market and whether the market has what it takes to move on beyond banks or, without the banks. So that's critical. Just the flows that we're talking about today. Yesterday's number, of course, includes the data from the Axis block deal. So, keep that caveat in mind. Sorry, I had changed that. That number actually is 3,000 crores plus. Apologies for that. But if you look at the monthly tally, then the FPI flows have slightly moderated in June. There's no taking away from that because we're looking at net inflows of around 13,000 crores so far in June, halfway down the road. The number for May was absolutely breathtaking. I mean, the buying was almost 44,000 crores from the FPI. So let's see, because how the bank how bank stocks move typically is absolutely in sync with the kind of FPI money that's coming in. So, Nigel, banks it is for me in terms of where my eye is going to be today.
Well, yesterday you had an expiry-related factor that played out. So, it's a Thursday, so that's why maybe we ended at the low point of the day, and we'll be undoing some part of that. Sure. The good news today is global cues are positive. Whether you look at the US markets or from an India perspective, we're looking at the dollar index, which has cooled down to around 102.2. You like both those cues, so that's positive. Global setup, no worries. The Nifty Bank, that's the worry, because in the last 1 week, that's lost close to around 1,000 points or thereabouts. But it's next to a very, very crucial 50 DMA, and you'll want that to get defended. If it breaks that, then you'll want to review the call. Otherwise, it's still a very much buy on dips market, and you don't chase the opening, but you look to get in on the intraday dip. So the SGX Nifty is promising a green start, but I don't think you go ahead and buy 50, 60 points higher. Maybe if you get an intraday dip, the trend is still long, and we're making higher weekly highs every week. So we look at buying the Nifty. What do the FIs do? Well, yesterday they added some short positions. I like that. Close to 9,000 short contracts is what they added. Close to 4 shorts for every 1 long position. And now at least the short positioning is moving towards that 50% odd mark. A net short market has always been good. We keep making that point out here because the flows, there's no worries. So when the FIs go net short, it gives you that additional fillip to move up. Let's focus on the strikes that we're looking at. The 18,700 call and the 18,700 put. Very, very active in yesterday's trading session. So there could be, a short straddle that's playing out. What's that? You pocket that 185 rupees of premium, and you hope that the Nifty stays in that range, 200 points higher than that 18,700 and 200 points lower. But in the near term, the support I'm looking at is 18,615 because of the writing we saw at around the 18,700 put, which the premium was 85 rupees. So 18,615 becomes important, and the 20 DMA as well becomes important if we go ahead and break that level. But the Nifty Bank, that's going to be the one in focus today. Yesterday, how much of it was a one-time effect? Can we see a bit of a bounce out here? And if the Nifty needs to go to all-time highs, you need your top performer to perform, which hasn't been performing in the last 1 week or so. So 44,000 call, that has the highest open interest. We highlight that. But yesterday, we saw a good amount of build-up at the 43,500 call. So for those writers, they are looking to defend that 43,800 odd mark, which will be crucial on the upside. You'll have, resistance that will come in at around the 20 DMA, close to around 44,000. That's the resistance level on the downside. 43,200 approximately, 50 DMA needs to hold out. SGX Nifty is suggesting a start in the green. Don't chase the open, but look to buy the intraday dip. Keep your stop losses in place, and the trend is up. So let's see whether or not we bounce from there. But what else, Manglam?
Take that point, Nigel. Don't chase the opening gap up, mainly because on 3 occasions in the last 8, we've had the Nifty close in towards that 18,800 mark, and thereafter we've only seen a bit of a sell-off. You're talking about the weakness in the Nifty Bank. That was something, everyone's looking at over the last few trading sessions. But yesterday what stood out was there was no support coming in from either Reliance or the IT index as well. So that is something I'll be watching out for today in particular, mainly because we're getting good global cues. 1.5% move coming by in most of the major indices. It's S&P 500's longest winning streak since November 2021. The important part, we were talking about Virgin Galactic in jest about the stock moving 40% because of them announcing their first commercial space tourism. The question is it that moment for the US markets as well, where stocks are just moving, flying away on any sort of news that is coming by? Are we in that phase? Because the last 1 month, Dow is up 4%, Russell 2000 rather, is up around 8.5%. So out there also there's a mid-cap and a small-cap rally which is underway. Global indices, last 1 month or so, Nifty has been the bigger underperformer out there. 2.8% higher as against Nikkei, which is up 10.5%, Nasdaq up 10.2%, Brazil itself is up 9%. Why is that? Because we're also the closest to a record high. If you just take a look at it, the Nifty is just about 1% away from its record high. The Nasdaq is 14% away, the Kospi 20% away, and Brazil 8.3% away. While that record high mark is elusive, remember, for all practical purposes, we've hit a record high already. And that's something that portfolios would like as well, because the BSE listed market cap yesterday crossed that 291 lakh crore, which is at a record high. On top of that, I was just looking at some 52-week high-low stocks. 10 stocks hit a 52-week high yesterday for every stock that hit a 52-week low. So 220 stocks at 52-week high, 21 at 52-week low. And stocks which are investable, which are A and B group stocks, there we had 137 AB group stocks hitting fresh 52-week high and no stock hitting a 52-week low. So that's a positive. But the question is, where do we go from here? Mainly because the triggers that have played out already, the RBI pause played out, India inflation IIP data, double delight we got, played out, US inflation data played out, the FOMC pause has played out as well. So where do we go from here? It depends on what the FIIs do, because the last 3 trading sessions, they've been buying big, irrespective of bulk deals or not. Money's been coming in. Where does it go from here is the big question.
You mentioned IT, and that's really important. I think we should put that cue on the table as well. TCS, there's bad news on that, and we need to see if that kind of has a spillover effect. So banks anyway we're watching out for in terms of weakness. But TCS, basically the news is that the Transamerica deal, which is the American arm of the insurer Aegon, they have cancelled a 10-year-long, $2 billion deal halfway through. And how the market digests this news in an already very fragile kind of sentiment environment around IT, that is an additional watch point that we need to be careful of. But let's kick things off. Well, lots to cover on the show today. So starting off with the equity call, and this one's coming in from Lawrence Belanco of CLSA, who says it would take a break above 18,363 to 18,988 resistance provided by the 2021 and 2022 highs, with momentum confirmation to provide a fresh breakout signal for the Nifty. He says such a move would finally signal a resumption of the market's uptrend that has unfolded off the early 2020 lows after 20 months of ranging price action below 18,363 to 18,988, and it would provide an initial upside target of 20,980 and then 22,650. Lawrence adds, the current momentum profile unfortunately displays price momentum divergence between the May and June highs, which suggests that the current advance of the March lows is mature and vulnerable to a pause or a correction, which implies further ranging price action below 18,363 to 18,988 before another breakout attempt can be mustered. So short point CLSA seems to say that right now we are heading in for a bit of a consolidation patch on the Nifty.
All right, does that continue for the money market as well? Let's get you some money market views. We have Lakshmanan V of Federal Bank saying that the Federal Reserve's decision to adopt a more hawkish stance effectively put an end to the rupee's 5 consecutive days of gains, wherein it reached its highest level against the US dollar in a month. He says incrementally, India's trade deficit for the previous month widened to its highest level in the current calendar year at $22.12 billion as well, which also weakened the rupee further. He says the focus now shifts to the monetary policy of the Bank of Japan, with the yen trading at a 6-month low against the US dollar due to policy divergence. Looking ahead, he expects the USD-INR pair to trade in a range of 81.72 to 82.45 per dollar over the next few days.
Okay, let's look at bonds now. On bonds, Lakshmanan V says the 10-year benchmark bond yield has been stable in the range of 6.95 to 7.05%. He says both the MPC and the Fed delivered market expected outcomes with subdued inflation. He expects the yield to trade in the same range with a positive bias and significant buying interest emerging at higher levels.
Well, we've got a lot of stock-specific action to track for you, and we'll get to that in just a bit from now in our special Top 10 segment. We're looking at Ashok Leyland, Siet, Zensar, Torrent Pharma, TVS Motors, Samvardhana Motherson, NLC India, and ONGC. They are all stocks on the back of positive news flow. However, you have 2 Nifty names in there that could be reacting to negative news flow. That's TCS and Bharti Airtel.